Welcome back, everyone. My name is Michael LeBlanc, Director and Senior Portfolio Manager, at Canaccord Genuity Wealth Management. Thanks for joining us again this week for Next Week Today, where we talk about everything that's going on in the markets and things that are coming up. We have a lot to talk about today. As you can probably tell, hopefully the sound's coming through okay. I'm still working remotely this week, but I'm back into the office normal next week. So thanks for bearing with me over the last couple of weeks. But let's jump into things. As I mentioned, there's a lot going on. Always keep in mind, though, everything that we do cover here is for information purposes. Always do your own due diligence or reach out to us at mikeonmoney.com. Happy to answer any of your questions regarding your specific situation. So as I've been saying for the last couple of weeks, I've been trying to remove this portion of our weekly update, specifically around the COVID updates. And then Omicron comes out. So we're back into the thick of things. As you're going to see, the Omicron virus, if you haven't been following the Omicron variant, has affected the markets a bit. Obviously, there's a lot of concerns around what this means and the outlook. It has spread fairly quickly. If you follow the news, started in South Africa, it's moved into Europe, it's in Canada, probably most places around the world already. That's the problem with these variants is by the time that they're found, they've actually been moving around people for several weeks, even months. So by the time they track it down, it's pretty much spread around the world. So I'm going to give a bit of update around the Omicron and what we're seeing and why we might want to be concerned or why we shouldn't be concerned. Now, keep in mind, I'm not a medical professional. This is all just as much as I've been trying to read in the last few days since it's come out. And also keep very much in mind that the data coming out is very early stages. There's not, no studies have been finished or completed. Nothing's exact yet. You know, if you read any of the experts, they will say, listen, here's what we're seeing early stages, but we don't have all the information yet. So keep that in mind. That anything we see today and anything I cover today, it's still early reports. So basically, the Omicron variant is a more contagious version of COVID-19. So it's mutated. It has the most number of mutations of any of the variants that they've seen so far, and specifically around the crowns, around those spikes. You've probably seen the drawns, which makes it more and more contagious. Now, they do believe, though, that this particular strain or type of virus, as it does this mutation, it actually becomes weaker. So more people can get it, but less serious side effects, especially for those vaccinated. So the experts are still saying, yes, we're not sure how effective the vaccines are against Omicron specifically, but like many vaccines, like the flu vaccine as well, although it doesn't protect you from every strain of the flu, it does mitigate the more extreme reaction to the virus. So you stay up on your vaccines is the recommendation out there. Get your boosters if you're eligible. It will give you a barrier of defense against Omicron as well. Those who aren't vaccinated, obviously, far more susceptible to the variant. And also to the long-term effects of it. So, you know, that's not going to change. Now, this variant, if you followed us through this last 2 years of talking about COVID, this was it was predicted back at the beginning that, we can get our countries or we can get ourselves all vaccinated, but unless it's a global effort, the more it's allowed to spread, the more it's going to mutate, the more it's going to change. And that's what we're seeing, right? Less wealthy countries out there haven't been able to get the same access to the vaccines that, countries like Canada have been able to. And that's where we're seeing those variants mutate faster and faster. In South Africa, I believe I saw the vaccination rate is less than 25%. And it's not necessarily the population that doesn't want to get vaccinated, it's just the availability of the vaccine isn't there yet. So, the global, the wealthier countries around the world have to continue their effort to get the vaccine available to all countries around the world in order to stave those off. So I think the key message around this is not to panic. Obviously, it's a concern. We're going to watch those studies and reports over the next couple of weeks come out with more details around it, the effectiveness of the vaccines around it. And we've already seen the vaccine manufacturers already working on modifying the existing vaccines to specifically target the Omicron version. So that won't take years. That will probably take weeks or months to get those out. So hopefully it doesn't become a big issue. Obviously, the big risk that the market's looking at is another economic shutdown. Things in Europe, especially, which was getting bad, or things were getting really bad prior to Omicron coming out, are certainly taking some bigger steps. Canada's started to restrict certain flights from the area, but really, that might help. But really, as I mentioned, it's probably already spread to most places around the world. And in fact, Canada's already found some in Ontario, and Quebec have confirmed some as well. So that's where we're at as far as the Omicron goes. There's been a lot of changes in the Canadian rules around crossing the border. Today comes into effect, any plane or train you want to get onto in the country, you've got to show proof of vaccine. There's the new federal QR code that you need to have to get onto any travel, even between provinces within Canada. And of course, there's still the test required when traveling outside of Canada to return to Canada. So there's where we're at on the coronavirus. We are going to talk more about Omicron as to what's going on in the markets and everything here today as well. So let's take a look at what's going on this week. Coming up, we have the home price index. We're going to talk a little bit about the home sales numbers in the United States. We got the Chicago Business Barometer for November to come out. The Conference Board Consumer Confidence numbers for November, Canada's GDP for September, they're all coming out this week. And also we're going to get Cyber Monday, so yesterday's Cyber Monday sale numbers. We saw some early reports we'll talk about, but later this week, of course, we'll get some more exact numbers as to how well retailers did and how many shoppers were out there trying to take advantage of some of those bargains. The stock futures did tumble though. Friday specifically, we saw a dip in the markets, mostly with the Omicron scare or concerns coming into the markets. Monday rallied a little bit. Today we're seeing that market pull back again after the Moderna's chief executive officer kind of came out and said that the vaccine would be less effective against Omicron as the new variant for COVID. Now, again, to clarify that statement, he said less effective, not effective, just less effective. It doesn't mean that doesn't give you a layer of protection. It doesn't help you. And if the early reports are correct that Omicron is more contagious but less deadly, then that lower level of protection can give you that extra layer of safety that you're looking for. So not to be overly concerned. Again, we're still very, very early stages of those test results. And just as I mentioned, just as the market kind of tried to find their footing with Omicron on Monday, where we saw the markets rallying back, Moderna's CEO came out with those reports, kind of shook things up a little bit, kind of a fresh concern of lockdowns, not just here in Canada or the US, but globally, obviously, with some countries in Europe already having surges in their numbers. And also a lot of the early reports around Omicron, it's obviously going to affect areas of low vaccination at a much higher rate or much bigger impact than areas of high vaccination rate. So we do expect to see pockets of outbreaks continue to surge and increase, but hopefully overall still have strong protection against it. Also going on out there, of course, the Canadian banks have been reporting and they're set to post some really strong results. And Canadian banks are famous for raising their dividends, doing share buybacks, which is great for dividend holders. So, if you're looking for yield, if you're looking for If you're looking for cash flows, the Canadian banks have always been strong, and in our portfolios, I actually use an ETF for most of our banking exposure. We do have some individual names in there, but I actually use to top that up ZWB. It's a Bank of Montreal covered call ETF, which gives you basically using the covered call strategy to increase your dividend by roughly 2%. Right, it fluctuates obviously depending on what's going on in the markets, but it increases your cash flow from owning the top 5 banks in Canada. So if you want more information on that, reach out to us. We do use it as a strong dividend payer. OPEC's looking to meet again. Obviously, we've seen some volatility in the crude oil prices, especially with the new variant. We saw oil break down to below 70 to 69. It is popping back up a little bit. And OPEC's strategy is pretty much to do nothing. The demand is still increasing. Obviously, this pullback is on concerns of another shutdown, where we'd see demand fall off again. But again, early stages to be concerned, I think, about another shutdown. And based on what we saw with the last shutdown and reopening, any volatility here in oil might just be a buying opportunity. In the U.S., we're looking at pending home sales prices for October, and they surged. Contracts to buy U.S. homes, previously owned homes, so this is not new builds, but previous owned homes jumped dramatically in October after being a little bit slower in September. So we're continuing to see that housing market stay strong, and mostly probably driven on the concern that mortgage rates are going to start to edge up. They have moved up slightly from their bottoms, but still considered very, very cheap where that here. And on the EV, or the electric vehicle market, Phoenix Motors is the latest to tap the public markets with an IPO, looking to come out, taking the shot public, looking for those investors who have an appetite for eco-friendly vehicles or want to invest in that. As I've always talked about, when we talk about EV, and I'm a big fan of the EV markets, I think there's a lot of growth there. If you've been following, we've talked about several new EVs to the market, several new companies coming out in IPOs. I'm not overly recommending people buy individual names. There will be some winners, there will be some losers, but what you really want to focus on here is look at all this competition that's coming into that marketplace. And if you followed any of our previous videos that I've done on EV, we've got, I think, 2 of them out. I've interviewed the CEO of Evolve ETFs, where they have one of the earliest to the market. In fact, I think it was the first to the market that invest into the EV supply chain. So it does have some manufacturers in there, but mostly it has the supply chain. So all the parts that go into these things. And I think that's where you can really win in that market. The symbol for that one is CARS, C-A-R-S. You can get it in Canadian, hedged Canadian dollars, because it is a global ETF, because these companies are around the world, or you can get this CARS.U, which is the US version, so it's unhedged to the Canadian dollar. So rather than chase after some of these new IPOs, really take a look at some of these diversified plays, especially when you're talking about a sector that is absolutely global. Canada and the US are still a small piece of that overall market. And with all the competition that's coming into the EV market, diversification is going to be key here. UK regulators are set to block actually a merger or an acquisition by Meta. Meta Platforms is looking to acquire the GIF platform Giphy in the coming days. They're looking to block that. And if you've been following this story or other stories, it all goes to the UK setting those new antitrust laws. So preventing companies from getting too big or monopolizing a particular sector or service. And the UK started to put out their new laws that are really going to be a template for the rest of the world. They've been very aggressive. We've been following, of course, talking about the Facebook and Google antitrust suits, where there's a lot of pressure, not only in Europe, but in the United States for these technology giants to break up, to diversify from some of their subsidiaries to allow more competition in that marketplace. So this is just another move by the UK regulators. Russia actually, Russia developers Somolet is targeting a US listing for 2023. So this is going to be interesting. Somolet Group has largely been a builder and are looking to move into the technology arena, and they want to take their stock public on the New York Exchange in 2023. So obviously there's a lot of PR and concerns around that. So we'll keep a close eye as they try to make a move into the US markets with their IPO. Record number of US firms have changed tack on the political spending after January 6th. So we saw a lot of this right away after the January 6th insurrection in the United States. But more and more companies now, as they're going through their earnings, are either stopping political giving completely, certainly to some candidates who were in support of the January 6th attacks, but also disclosure of any of their political givens, so people can see where their money has gone to not trying to disassociate themselves from certain either political parties or particular candidates in the United States who are involved or certainly show their support around the January 6th attacks that happened there. Hold on a second. Sorry about that little interruption. So let's continue on. So let's take a look at what's coming up this week. Coming up, as I mentioned, we're looking at the Conference Board is expected to show the Consumer Confidence Index, likely to decrease a little bit in November. Obviously, as we've been covering for weeks and weeks now, the concern around the inflation rate and the tapering of the U.S. Liquidity in the markets has been a large concern around the market and consumers. Now, when we say a little bit of decrease, we don't mean that it's crashing. Just the Consumer Confidence Index is likely to decrease a little bit for November from October. October was quite high. There was a lot of bullish sentiment going into October. And as we round into the new year, we're obviously going to see some pretty normal concerns to try to people stop looking at 2021 and start looking into 2022 and what is that going to look like. So not a big concern there, but we're expected to see those numbers a little bit lower. Salesforce is expected to post a rise in the third quarter revenue. Of course, high demand for the enterprise cloud tool. So if you're not familiar, Salesforce is a CRM or customer relationships manager used by many Salesforces and companies. And obviously people working at home or people working on the road has just grown through the pandemic. So they're looking to increase their sales there. And another thing I think really affecting the market right now, Jerome Powell and Janet Yellen are getting together to talk about, CARES Act oversight. So this is the Treasury and the Fed reserves, building the new economy coming out of the pandemic. But also they came out and said that they were going to speed, they were basically looking at the markets and the economy and saying that they could speed up the tapering. So it means bringing in that interest rate hike sooner than later, not into 2023, but definitely into 2022. So that signaled the market that we could see those interest rates sooner than later, obviously putting more concern on top of the new variants into the marketplace, and which is why I think we're seeing a little bit of sell-off today in the markets as concern rises around that. Other top news, Twitter CEO Jack Dorsey is stepping down as CEO and handing the reins over to his chief technology officer. Dorsey, it's been an interesting story around Twitter. He was ousted as CEO a few years ago. Then he was brought back into the role to try to kind of turn things around a little bit for them. Obviously, Twitter, as well as all social media companies, have faced a lot of criticism, both from governments and regulators and from their users, back and forth. Some positive support and other, a lot of negative on the other side. He's basically stepping down. His comments are basically he's built up the firm that it doesn't need him anymore, and he doesn't want to stay there while the company needs to grow beyond him. So he was the founder of Twitter, so he's stepping away from the role. So it'll be interesting to see if there's any big changes with his departure in the coming year. Cyber Monday is expected to be a little bit slower, mostly because, not because we're seeing any data to suggest that American consumers aren't in good health or it's not a strong spending market. Simply, there weren't as many deals. We still have the supply chain issues out there. Inflation has affected a lot of the pricing out there. And if you went online or you went into some of the stores on Black Friday looking for some really great deals, I think a lot of people, I won't say disappointed, but certainly didn't find as many cheap or discounted prices as they'd hoped for, just due to the lack of inventories out there. The retailers did not need to discount their prices very much to still sell out or have healthy sales through the Black Friday, Cyber Monday weekend. And then the U.S. Federal Trade Commission has ordered 9 companies to turn over information as they do a probe into the supply chain problems. I don't think they're going to find anything surprising, and I don't think these companies, are against it. I think they're happy to turn it over to see if there is a solution to the supply chain problem. I don't think retailers are necessarily happy about it any more than anybody else is. So, really, I'll be surprised if anything productive comes out of this probe, but in any case, we'll see that data come out here in the next little while. Walmart's also having a change at the top. Their veteran CFO Biggs is stepping down next year, retiring, taking advantage of all the success in the long time number of years that he worked at Walmart, and just throwing in his hat and taking some time off. So good for him. U.S. lawmakers are also asking FAA to have some more details around how they're going to maintain oversight of the Boeing 737 MAX, MAX 8 specifically. If you remember this story a couple of years ago, the Boeing 737 MAX 8 was grounded after 2 horrific crashes due to a faulty software error and training errors around the MAX 8. It was grounded for the better part of 2 years and was put back into service, just this year. They're up and flying again around the world. It's one of the most popular selling planes in commercial use right now, and most people enjoy it. I've flown on it several times, and it's actually quite a nice aircraft. But obviously, there's a lot of concern around the oversight, not just because of its past problems, but certainly the FAA came under a lot of scrutiny as to why they didn't catch the problems ahead of time. So the FAA's, the lawmakers are asking FAA to say, okay, this time around, what are you doing to make sure you're going to catch the problem before we see 2 horrific crashes like we did see? On the US dollar front, it's a bit lowered. Again, just concerns around what's going on in the markets. Omicron, about a possible shutdown again. We're seeing this pretty much globally. As I mentioned, Europe reacted pretty quickly when the Omicron was identified to restrict borders and start talking about more bringing back some COVID restrictions. The US has been pretty tapered in the response, basically, continue with the normal precautions that they have in place and waiting for more data to come out, which is good. But obviously the dollar, the global view on the dollar was to push it down a bit negatively. And we also saw that in the Treasury note as well, seeing that fall to about 1.44. Last week was in the 1.6 range. And that's, just some continued pressures over concerns about more shutdowns. Oil, as I mentioned, dropped below 69. Again, I would see this more as a buying opportunity unless we go into a full, complete global shutdown again. I don't think we're going to see a massive decrease in demand. In fact, going into 2022, all expectations are more and more people are going to start traveling again. So unless Omicron really puts the brakes on people's travel plans, and again, a lot of oil is used in shipping and transportation. Not transportation in our cars, but the ships, planes, and trains that are moving things around the globe, and that supply chain is still backed up. And as soon as that starts moving again at a increased pace, that demand is going to continue to eat away at the supply side of things. Copper fell a little bit, again, just on Omicron. It's the theme of the week, and I think it'll probably stay the theme for the rest of the week. But hopefully, we'll get a lot more details around that going into next week. So with that, again, a little bit shorter this week because I'm on the road. I'll be back to normal next week. But if you have any questions, or if you want to see in the replay of any of our videos, go to mikeonmoney.com. There, it's on the screen. If you listen to the podcast, you can go there and subscribe to either our videos or our podcast. But as always, love to hear your feedback and any questions you might have on this topic or any other topic. And as soon as I'm back, I'm going to be putting out a video on the metaverse. So you've sure you heard the term meta, because Facebook changed their name to that. But what does that mean? How to invest into it, and where the opportunities are going to lie. But with that, thank you very much for everyone for joining us. Look forward to talking to you soon, and take care out there, especially if you're in British Columbia, obviously with all the rains that are going on. Stay safe, and hopefully those that have been affected, we get some solutions to what's going on very quickly. Thank you. Take care.